8:30 Eastern release. The entire market structure is provisional until the inflation print drops. Welcome to the Gamma Brief. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. If you've got ideas on how to make this better, like making sure the microphone is on, things you want to see, things that are not landing, drop them in the comments. Constructive feedback is fuel for this experiment. As always, this is market intelligence, not financial advice. All right, let's get into it. It is Tuesday, May 12th, 6:45 AM Eastern, and ES futures are trading at 7,413. Yesterday's momentum thrust breached our 7,400 call wall, rendering our chop forecast a miss. If the consumer price index triggers an expansion today, then the remaining dealer buffers will evaporate instantly. Pre-market dealer positioning registers as positive gamma with a net GEX magnitude of positive $3.9 billion. In a confirmed positive gamma environment, dealers are net long options, hedging by selling into rallies and buying into dips to dampen volatility. However, this regime is borderline. The GEX flip level sits at 7,420, placing ES futures just 7.2 points away. With VIX resting at 18.89, the overnight regime is highly vulnerable. 9 high-impact data releases are scheduled before the open, which could force massive dealer re-hedging and rewrite the regime entirely before the bell. The geometry is tight. ES sits exactly 44 points above the 7,370 put wall and 36 points from the 7,450 call wall. ES futures have already cleared R1 at 7,413, meaning the first active resistance is now R2 at 7,426. The 88-point expected move is expansive enough to threaten both boundaries mathematically, projecting a potential test down to 7,325 on the downside or up to 7,501 on the upside. Overnight, escalating US-Iran geopolitical tensions dominated the tape, driving a sharp bid in the commodity complex as crude oil surged. Across assets, ES futures slipped 0.31%, VIX expanded 2.78%, and the 10-year yield ticked up 4 basis points. Sector leadership reflected the macro theme, with energy adding 1.8% and basic materials up 1.2%, while healthcare and communication services lagged. Today's risk radar is entirely consumed by the 8:30 AM Eastern CPI suite, including month-over-month, year-over-year, and core inflation data. The sheer density of this release makes the pre-market regime fragile. CPI drops at 8:30 Eastern, and the 88-point expected move projects a wall breach either way. Tell me in the comments, does this print break the 7,420 flip, or does positive gamma absorb the shock? We also have the World Agriculture Supply and Demand Estimates report at noon and Fed Governor Goolsbee speaking at 1 p.m. Eastern. This environment is consistent with patient-based entries post-release. It punishes directional conviction ahead of the data. The primary playbook requires waiting for the 8:30 release. A rejection below the 7,420 flip triggers a bearish mean reversion targeting 7,374. Invalidation occurs if price holds above 7,420 post-CPI, flipping the read to a bullish breakout targeting 7,450. The regime is technically positive but perilously close to transition. Let the inflation data clear before committing capital to a directional view. The data drops before the open. Let the market show its hand first. Level set, bias defined, good luck out there. If this daily breakdown gives you an edge, hit that like button and make sure you're subscribed so you don't miss a session. Standard disclaimer remains. This is market intelligence, strictly not financial advice. Options are high risk, manage your size, and trade your own plan.